It's Monday, and that means another week of FreightWaves Now. I'm your host, Anthony Smith, and coming up, Andrew Cox is going to give us a Schipper update. But first, we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Monday carrier update presented by PowerFleet. I'm Zach Strickland, and we continue to see volumes go up across the weekend. We see our outbound tender volume index for both van here in the blue mountain and reefer in the purple side. Now, something that's very interesting to note is that reefer really took a little bit of time to get going here. It did have a little bit of an increase through the first part of March, but then all of a sudden here in the last week or so, we have gone just exponentially higher. The reefer outbound tender volume index has really caught up to the van outbound tender volume index there in the last week or so. The van volumes were really strong early in the month. Again, a lot of that panic buying and store really clearing off the shelves there in the stores. Looking at the overall country in terms of outbound tender market share. Now, this is not absolute volumes. This is a relative index. Outbound tender market share is going to indicate the entire balance of the market as they relate to each other. So Dallas, for instance, did have a little bit of an increasing volume, but not as much as some of these other markets. So you're going to see them show a little bit of a downward trend to start our week. But Atlanta, Georgia, still continuing to grow robustly throughout all this. Harrisburg, Pennsylvania, Allentown, Pennsylvania. The Pennsylvania markets continue to be very strong up there in upstate Pennsylvania, and especially the areas around Philadelphia. Again, a lot of these are shorter haul volumes that are moving into the megalopolis. So again, we're continuing to see growth in those markets, which is very impressive considering that they have had 3 to 4 weeks of consecutive record-breaking growth in that area. Ontario, California, we talked about this last week. The Los Angeles volumes are starting to show signs of weakening as we see that port volume really come down. Not as much freight out there. Elizabeth, New Jersey, that's another interesting one to pay attention to. Looking at our map here, you see the markets that are showing relative decline week over week in market share values. We got Los Angeles over here, Ontario. There's your Elizabeth, New Jersey, areas around the megalopolis showing some of that contraction. Of course, we're still going to wait to see just how this, stay at home, making sure that everybody's not getting into contact with each other, all those lockdowns. Illinois had a lockdown. New York has had one as well. We got a few other coming online this week that are going to have potential impacts to freight volumes, especially as some of these shippers may or may not be considered more essential than others. Again, that may have a pretty big impact to the overall freight volumes in the United States. Lakeland, Florida down here, pay attention to this one. This is where a lot of our reefer volume comes out of. Produce season for this area it's going to start here in the next couple of months or so. So definitely one to pay attention to, but also a lot of freight for the food comes out of Florida in general. A lot of imports, but also the whole supply chain of the East Coast food supply chain really has a lot of prevalence down out of that market there. So Lakeland, definitely pay attention to that one. The Midwest continues to show some robustness. Chicago, the city itself, that market is not growing as much, but I wanted to talk about Joliet. Joliet was one of these markets. The Chicago market is the hub of the United States in terms of flowing from the West Coast to the East Coast. It acts as a good centroid for a lot of these trucks to come and serve a lot of the DCs around this area. It'll go down into the south to Atlanta. Chicago to Atlanta is a pretty major lane in the United States. Chicago to New Jersey, Philadelphia, et cetera. Again, very strong lane. So Joliet has a railhead in it, very important market in terms of freight flow throughout the United States. Reefer volumes, just like you saw with the overall market conditions out there in ROTVI USA, really spiking here in the last week or so coming out of there. And a lot of this freight is long haul freight. It is not necessarily your short haul freight. So any truckers out there that are looking to get some of that long haul freight activity, especially on the reefer side, but dry van as well, dry van freight volumes, again, dominate the market. So a lot of long haul freight out of Joliet, Illinois, so definitely pay attention to that. Looking at capacity in the United States, this is our volatility market. So you see right here, outbound rejection volatility, strong increases through all of our top markets in the United States right now. So rejection rates are following the volume significantly increasing. So we're seeing a little bit of moderation in the volumes, stronger increases in the rejection rates. So capacity is still remaining very tight. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to Schipper Update. I'm here with Andrew Cox. Andrew, what do you have for us today?
Anthony, today we're talking about the coronavirus impact on unemployment. We've written about this over the past week. I actually did a deep dive this weekend that kind of posed the question whether or not the U.S. could see the 20% unemployment rate that Secretary Mnuchin stated that we could see if significant fiscal stimulus wasn't taken. So this is just a look at our weekly jobless claims. This is something that comes out weekly from the BLS, and you can see this massive jump last week up from around 210,000 to 280,000. That's plus 70,000 jobless claims. That's one of the biggest jumps in the history of the U.S. But I don't think this is just the beginning. I think this impact is going to get much higher. This is a Goldman Sachs estimate, actually. So you can see that we stayed roughly between 250,000 and 500,000 jobless claims for 3 decades. Even in 2008 and 2009, they jumped up barely over 500,000. Some are expecting upwards of 2 million in the coming week.
Right. And Andrew, one of the things you just mentioned, even in the previous slide, is that this is very early on. So what we've seen in jobless claims is just a small tick up as what might be to come.
Yes, exactly. I mean, this is just the very beginning of this jobless claim run. The unemployment rate is going to skyrocket in the coming weeks and months. Whether it probably will peak out in the next few months. It's not going to be anytime soon. In that deep dive I wrote this weekend, I kind of broke it down by industry, who was most affected, and we kind of threw some layoff estimates on these different industries. And the problem with, or the biggest thing about this coronavirus and the impact to unemployment is that it's really affecting some massive industries. So if you look at retail, trade, and food services, so these are restaurants and bars. I mean, together there's nearly 30 million Americans employed there, and almost all of those places are completely shut down right now. So those people are being furloughed, if not downright laid off.
And one of the things I'm seeing here is that these are very much consumer-facing industries. Knowing that the consumer is the driving force of the economy, I can't help but think that this is going to have a deep impact in not only consumer spending, but the businesses exposed to that segment.
No, that's exactly right, Anthony. Like there's multiple cycles to this thing. The first thing is the impact itself, and then you have kind of the mental impact that later on. And people lose their jobs and people are laid off. That's one thing. But then they change their complete spending habits. It brings down consumer discretionary spending. It brings down consumer sentiment, which has long-lasting impacts, much longer than even when people get their jobs back. So yes, this is going to be a long-lasting impact. We're going to see unemployment rate rise way up. I actually estimated that, I did a couple scenarios, one with fiscal stimulus and one without, and we won't get into the one with, maybe we'll do that tomorrow, but either way, the unemployment rate without fiscal stimulus and with those affected industries, we're estimating that the unemployment rate could get as high as near 15%.
Gotcha. And one of the things that you just hit on is that one of the things that could happen is the sentiment, that could be long lasting, right? Mm-hmm. So that's going to be an area that we're going to watch closely, because that can actually outlast the actual impacts of the corona, right? So that can be something that even after the coronavirus diminishes in cases and things like that, that sentiment, that mindset, that mentality is still lingering.
Yeah, that's exactly right. We're a few quarters away from us even being confident that the coronavirus has been contained. And like you said earlier, the majority of our economy, I think 65 to 70% is consumer driven. So the consumer is what's carried us for the last 3 or 4 years through even a manufacturing recession and bad housing in 2018. The consumers have been the one to pull us through. And now this is the first time where we've really had massive downside risk to consumer sentiment because of this virus.
And one of the things I think that's going to be a potential headwind is those being able to apply for unemployment, right? Because we're seeing so many industries being affected, so many, as you mentioned, being furloughed, just laid off completely. But I think one of the headwinds that we're going to see is that there's going to be a lot of difficulties for them getting through the unemployment process. We've seen some states taking measures to, I think, really reduce some of the red tape around unemployment. But I think that's going to be one of the areas where we really see a lot of difficulty for people that are looking for unemployment assistance, might not be able to find it.
I agree with you. It reminds me of when the Affordable Care Act was rolled out, and everybody tried to get on healthcare.gov, and it almost crashed. They did crash the site for multiple weeks. I think we're going to see some similar things where you have just massive demand for these unemployment services. So yeah, you're right. We probably are going to see some big technical difficulties from people trying to apply for it.
Gotcha. Andrew. Insightful as always. Thank you so much for that
Welcome,
update.
sir.
And thank you so much for tuning in. That's going to do for this edition of FreightWaves Now. The content doesn't stop here. If you're looking for a little bit more deeper insights from Andrew and his rest of his team, check out our Passport program where you get the deepest insights on all the latest industry trends, especially during this critical time. Thank you so much for tuning in, and we'll be sure to keep you updated on the next episode.